not a financial advisor, and this podcast is for informational and educational purposes only. The content discussed here is not intended as financial, investment, tax, or legal advice. Always consult with a qualified professional before making any financial decisions. Past performance is not indicative of future results. All opinions expressed are my own. Aloha and welcome back to the week that was. I am your host, Colin Edsman, and this is your weekly market recap. Thank you for joining me. Let me just check everything's going off up to date here. Audio's going. I sound okay. All right. Thank you for joining me. I hope you are doing well wherever you are, whenever you are. We are sitting here Friday, 8 p.m. in Hawaii. It is already Saturday in New York, somewhere a little after midnight, probably 1 or 2 o'clock. I don't know. I still haven't gotten the clocks up. We'll get there when we can. If you're exposed to the stock market or even slightly looking at it, you already know what we're going to be talking about. It's still ripping and roaring. The S&P 500 climbed to fresh all-time highs this week, throttled back a little bit second half of the week, but honestly, we're not surprised. That's what keeps happening. All right. So we're going to be going over lots of different stuff today, from the stock markets, the bond markets, as well as oil, geopolitics, Bitcoin, of course, and some other assets in that area like XRP. Also, we're going to be going over some of the things with Robinhood as well as Trump accounts, because that's huge this week. And Robinhood got a huge green candle yesterday as well as today. So it's been a great week for me as a Robinhood shareholder and a Robinhood just big fan of the company. Honestly, they're just friends of the family at this point. All right, so let's quickly get into it. I'm going to just cover the overall market briefly, just honestly, because nothing has really changed a whole lot. The stock markets hit new records, modest weekly gains. Stocks delivered another positive week overall, extending the winning streak despite some choppiness. The S&P 500 climbed to fresh all-time highs around 75.20 to 75.80 intraday, finishing the week roughly 0.9% up. Its eighth consecutive weekly gain. 8 weeks of nothing but rip. The longest streak since late 2023. The NASDAQ rose modestly, about 0.5%, also touching records, led by chip and AI-related strength. Micron and Dell stood out. Did you buy Dell? Dude, you're getting a Dell? Oh man, I cannot believe it. I wasn't going to test my luck with Dell. I hold a lot of Intel, so why even try? I'll wait for the next thing that Trump talks about that he says buy. Like, he literally just said buy it. Like, if you bought it like 4 weeks ago, I saw something today. If you bought 25,000 worth of Dell like 4 weeks ago, you'd be up to 6 figures right now. Just, I love this stock market. And it just stuff like that all over the place. The Dow Jones performed solidly, briefly pushing above 5,500 to 5,580 and closing the week higher, but about 2% in some, up 2% in some kind of like snapshots. The key theme here is broadening participation with strength in tech and semiconductors, consumer, discretionary healthcare, and real estate. Energy cooled a little bit as oil pulled back. Small caps, the Russell 2000 showed relative strength at times. Markets proved resilient as geopolitics and inflation worries still sort of linger here. We're not completely out of the woods in that regard. As far as the bond markets go, we got a little bit of relief, like modest. Bond yields eased from recent highs as oil prices softened and de escalation hopes in the Middle East gained traction. The 10-year Treasury yield settled around 4.44 to 4.45 by this Friday, today, or yesterday, wherever you are, whenever you are, down from near 4.59 last week. Longer end yields, like the 30-year, also pulled back modestly, testing towards 5%. Kind of a psychological level we're looking at. Some This provided some breathing room for the rate sensitive assets after the previous week's sharp sell off. The bond market is still pricing in limited near term Fed cuts, but any further oil relief could ease pressure just a little bit further, which is nice to see on the horizon here. You never know what happens with summertime every year, so this summer could be not so bad. Maybe people don't sell in May and go away. Maybe people just buy in May and never look at it again. Who knows? This year could be seeing 8,000 on the S&P 500. Kalshi has it priced in at 60% on the prediction market. So I can see that as a strong possibility of happening this year, if not early next year, which means we've got another 500 points to move from here at least. Because I mean that's an incredible amount of movement. If we continue this just rip roaring trajectory, who knows where we could be. Oil and geopolitics are easing as far as tension goes. Oil prices declined, notably on hopes of diplomatic progress between the US and Iran. I'm personally hoping that's happening. I'm getting increasingly tired of covering oil. It is so boring and it is unfun, but it is important to the overall macro and how the rates will be priced in moving forward. It's just, oil. It's so sad around it. But Brent pulled back from 100 to 110 zone with reports of potential ceasefire extensions at the Strait of Hormuz. Stabilization helping in that sentiment. This reduced the immediate inflation risk premium and supported a relief move in equities and bonds. No full resolution yet here, but de-escalation narrative was the biggest positive driver this week. Looking at Bitcoin and some other assets, Bitcoin traded in the 73,000 to 7,700 range. Thank you for joining me. And thank you for letting me know that the audio is good to go. I really appreciate it. My family is enjoying a movie in the other room while I'm here in the studio talking to you. Please leave your comments in the comment section. If you have any questions, I'm happy to get to them. Remember, I'm not a financial advisor, but I do enjoy giving an opinion on something that you're interested in. So if you have something that you like or you're interested in, or you're kind of trying to see if right now is a good time to buy, by all means, leave me some comments and maybe I can cover it in a small pod for you to kind of just give you my thoughts on whatever you're looking at, from stock to ETF to crypto. Um, I can kind of give you a crash course on most of it. But back to Bitcoin and other assets. Bitcoin traded between 73,000 and 77,000 range, ended the week softer around 73.5 to 74,000. After some consolidation, it showed resilience but lacked a major catalyst. And that's what sort of Bitcoin needs. But that's okay because it didn't fall out of the sky either. So we've got a good consolidation area, which is not bad for the overall Bitcoin. Um, NVIDIA adjacent names and AI infrastructure plays continued performing well amid strong earnings echoes from prior weeks. Also, this coming Monday, NVIDIA has an event going on. I didn't see all the details on that. I'll probably do something live since I have the time. Summer is here, so I'll be enjoying a little bit more time here on the pod, making some content. I'm going to enjoy the summer with my family. It's going to be chef's kiss of a summer. Son's birthday is in a month, so a lot of that's going to be happening, but I'm going to be here at odd times during the summer because I'll have the time to be with you. But this coming Monday, we got something going on with NVIDIA, so you and I might just end up discovering it together, and I'll just run it live and sort of enjoy it, take some notes, because it's always good information when Jensen Huang comes on and speaks on literally anything that he knows. Because whatever he knows a lot about. And what he knows a lot about is the overall future of AI, data centers, robotics, anything that's attached to a computer is something that is in his lane. So I'm excited to hear whatever he's going to talk about. But this was a constructive week overall. New highs, sector broadening, and some geopolitical relief. The market is digesting higher for longer rates while rewarding earnings growth and AI momentum. Volatility remains, but the underlying resilience is impressive. So let's move on to the next segment here because I'm really excited to get onto this portion here. Robinhood and its price action. Oh my goodness. So Robinhood news this week was just pushing the price way above 90. I mean, it's upwards of $94 right now. I mean, I can't even believe it. It just took one thing and it decoupled from the Bitcoin price action. We'll check on that in a second. Um, let's zoom in on one of the standout portion of the overall retail stories. Robinhood is this stock had a sort of a dramatic week, I guess, delivering one of the biggest moves in the financial sector. Early in this shortened week, because of the holiday, Robinhood traded in the low 70s, hovering around 73 to 76. But the real fireworks came in on Thursday. The stock exploded 11% in a single day, closing around 94.30 in some noted intraday highs of 94.95. It broke out sharply from recent consolidation, posting its best day in weeks and moving well off year to date lows. Volume spiked heavily on the move from recent 52-week lows near $63. Hood had shown strong recovery potential, though it remains well below its all time highs above 150, which I miss. I'll see you again. We still think about you. But the big catalyst around the Robinhood price action this week was Trump accounts launched their app this week. I'm personally really excited for the all of the children who will be able to be exposed to the stock market for the long haul, regardless of if their parents know it exists or not. If your child qualifies, they're gonna get an account. But Robinhood rolled out its product because they're partnered with Trump accounts, retirement accounts for kids born between 25 and 28. These are federally backed tax deferred accounts seeding $1,000 from the Treasury. Robinhood is partnering with BNY Mellon as trustee, and the app launched generated a huge buzz and retail inflows. The app went straight to number one on the financial apps on the day. The Trump accounts app. It was insane. The participation I'm seeing, people are very excited about it. Right now, it's pretty nitty gritty because it doesn't actually start till the 4th of July, which is just duh. That's a great day to launch all of this. I don't know. I want to say dreams. You're launching dreams with this money because your parents won't be able to necessarily mess with it, right? If your child qualifies to get it and it grows, your employers can add more to it. It's a win-win. It's gonna have a lot of it's gonna be It's going to be robo automated, but it's going to be led by a team, is the best way I can put it. Most likely by the Robinhood strategies. We'll get into that for a second. Another one of the big catalysts for the Robinhood stock was the new agentic trading tool for automated stock trades, plus an agentic credit card and other AI enhancements, all attached to the Robinhood Gold Card. I personally don't have any access to that yet. As soon as I do, I will let you know. This added to the excitement around the Robinhood's tech evolution. Firms like Mizuho maintained outperform ratings and raised price targets, some as high as $155. That's right above the all-time high, and call me when we get there, honestly. This helped fuel the momentum and broke the stock's tight correlation with Bitcoin this week. Honestly, Robinhood successfully diversifying beyond pure crypto, at least on the price action, is just such a relief. Because of its trading volatility, like if Robinhood can trade on another type of price action that's less volatile, that's better for the stock, better for the investors, better for the overall company, because then it reflects what it's actually doing as far as where the revenue comes from. Like we know, if you've been following the podcast, the revenue from the Bitcoin side has or not Bitcoin, but the cryptocurrency revenue for Robinhood has sort of dropped off. So about 47% as far as the last earnings was talking about. So it's nice to see that we're getting earnings in other areas. I mean, prediction markets are huge. We're getting earnings from Robinhood Strategies has a fee. By all means, they could double that fee, and I would happily pay it because I deserve to have something that or a portion of my portfolio that isn't gonna be as wrong as I am a lot of the time. Yeah, sometimes I'm lucky and I know how to keep my gains when I'm lucky. But I'm not gonna be lucky all the time. I trust Robinhood strategies run by the best people to take a portion and just I don't have to think about it, right? I can take a third of my net worth and let them grow it for me. And then I can learn this trading market with you, with me, with my friends, and evolve as a trader. And that will just keep going, and I'll use that as sort of a benchmark. So if I can keep myself somewhere about the same rate of growth as the Robinhood Strategies portfolio, at least I know I'm doing almost as well as the genius team behind that portfolio. But that price action disconnection is a huge relief. The Trump Accounts launch app this week taps into a massive new consumer segment, families and long term savers. While AI features position it as a more sophisticated platform, this week's surge shows how product innovation and retail friendly policy moves can drive explosive price action in Robinhood. It's a reminder that in the higher for longer rate world we're sort of in at the moment, companies can grow deposits. Gold subscribers are up, and transaction volume keeps on winning in that regard. We're gonna continue watching this. I can see this pushing $100 next week. I don't see why it can't. The overall push down was kind of relieved, right? The reasoning why it was being held down due to Bitcoin's price action is sort of relieved. We also have the pattern day trader change, as well as massive inflows, most likely due to the SpaceX IPO. We got an IPO today, and I was excited. I thought it was SpaceX. It's not. I mean, I don't know what I was thinking, but it's something called Liftoff. If anybody knows what that is, please leave me some information on it. I've never heard of it, and I'm not planning on picking up any IPOs before OpenAI, Anthropic, SpaceX. Like, why would I pick up anything else before now and then? Why would anybody else put their IPOs between now? Like IPO after it's SpaceX. Just like I don't know why people would even try. Like the money's gonna go over there if we're gonna put our money towards an IPO. I'm sorry, or I'm just gonna reinvest back into RVI, which and RVI is great to see as a shareholder, but the actual value, that NAV value, is still down here at 25. So we could see some correction there. I'm not quite sure how this 100% works yet. We're gonna have to learn that together. All right, so let's talk about at least for as far as what I know about Trump accounts. Because it's important. Just get off your high horse if you're someone who's scoffing at the Trump accounts. Just if your child qualifies, take the money. And if they don't qualify for that small year period, that child will still qualify for $250 from the Dell Foundation. So that's another reason to even get your older children signed up. It's going to be theirs regardless. You might as well be able to add to it, have your employer add to it. It's great for you. It's great for your child. Your child has this nest egg that grows on top of the most powerful wealth generating engine that has ever existed, the stock market. Yes, you can go broke on the stock market if you're dumb or you're impatient. That's really the only two reasons you ever go broke. And if this is managed by the people who I know personally manage things really well, and the receipts show that they manage things really well, your child's outlook is really good in that